Hi, I'm Victoria. I work for the Money and Pension Service and I've teamed up with Plain Saver to talk money. Every year we encourage people to have more open conversations about their money. We do this through our Talk Money Week campaign, and this year we're encouraging everyone to do just one thing to improve their financial well-being. Here are some ideas of simple things that you can do to start a money conversation and positively change your money mindset. First thing to do is to create a budget. A budget is basically setting out your income and outgoings. The head of finance of our country, the Chancellor, creates a budget every year, which is twice a year, and we should too. Many of us don't like to do this, but it's a really healthy money habit to get into. It doesn't have to be a massive chore because modern internet banking, online banking makes it much easier. You can check out your statements, sort your direct debits, have a look at your standing orders. It's all laid out there for you. It's an opportunity to talk money to yourself. And we'd recommend that you do this at least once a year. It also allows you to have conversations within the family about what you're spending your money on and where savings could be made and what you could do with that money instead. Check out all those little taps with your debit card and you're making lots of little purchases day to day. Could you do a weekly shop, possibly a monthly shop, and save money? Another one to look at is subscriptions. Are you paying for things that you're no longer using? I know everyone always uses the example of a gym membership or sports club memberships, but how about all the streaming services? What about the Disney Channel you've got for the grandchildren or your children, and they're now just watching YouTube? Another thing that we tend to buy sort of almost subliminally is insurance, particularly when we buy electronic goods. So again, have a look for insurance policies you may be paying out for tablets or phones that you no longer use. So the budgeting process lays out all this information and gives you opportunities to make changes. There are some great tools to help you with this process. Money Helper has an excellent budgeting tool on the website, and you don't need to do it all at once. You can save it as you go along. You can save it as a spreadsheet. You can download it. Plain Saver also has one that you can print out, complete, and share with the family, and they'll love you for it. I just want to let you know that any websites or telephone numbers that I allude to, we will be putting into the description so you can check them out afterwards. We find it difficult to talk about money, and we like talking about death even less. So I'm going to put the two together. It's something that you should consider when it comes to pension savings. Your pension is a valuable asset. A lot of people have been auto-enrolled into a workplace pension. Part of this process, you will be given an opportunity to complete a nomination document where you can say who you want to receive your pension savings in the event of your death. So that's obviously if you die before you get the opportunity to retire. The nominated people could be, for example, your partner or your children. It's a good idea to review these arrangements because circumstances do change. It's quite common when I mention this topic in financial well-being talks that someone will say that they need to change as an ex-partner is their current beneficiary. There are different types of pension, and it's always worth checking out what applies to you. And again, you can make nominations or you can find out what arrangements would be made in the event of you not being able to take this when you retire. Places to go for this information is obviously with a pension provider, but your HR department might be able to help as well. The other thing I would say is that if you're thinking about this, it is a good time to have those conversations with your family about what would happen if you weren't around anymore. And you might want to think about other provisions that you could put in place, for example, making a will. Many conversations are often uncomfortable and can be upsetting, but knowing there is a plan in place brings peace of mind to everybody. A good place to find out about all of the rules around pensions and what you can do with them is Money Helper. There's lots of helpful information about pensions on the Money Helper site, including a pensions calculator to help you calculate your retirement savings pot. And our pension experts can help you with guidance on free phone 0800 011 3797. So let's talk about savings. This is a topic that we generally feel more comfortable talking about. It's a good idea to save. Having a savings pot helps us cope with unexpected bills or emergencies. It helps to reduce stress knowing we're covering our own backs. The crucial thing about an emergency savings is they're there for emergencies, so they need to be accessible. So a standard savings account with your bank, building society or credit union will give you immediate access to your cash. Most will also pay a low rate of interest or a dividend too. So for bigger purchases, sort of medium-term savings, these are things or events that you plan for. and you probably have a longer timeline for you to help you reach your savings goal. So it might be, I don't know, deposit for a new car or a wedding or a special holiday. Here you may want to lock your savings away so that you can't get to them easily. You probably also get a better rate of interest if you do this. These types of accounts can have restrictions on access. So again, have a think about that, read the small print. There's lots of information on different types of savings accounts on Money Helper, and there are comparison sites you can use to research to look for the best deals. So we've had short, medium, and now we're going to look at long-term savings briefly. This is more about planning for things that are going to happen way in the future. So retirement income is one. You might want to save for your children to study at university. And again, starting this as early as possible will make it easier. For these types of savings, you might want to consider looking at vehicles that are tax efficient. So I've mentioned pensions, but for another savings vehicle that you could use would be ISAs, where you don't pay tax on the interest. But again, there are restrictions around these, so do check that out. You may also want to look at investment products. These are slightly different. These involve stocks and shares, which means there are more risks, but you also get a better return. There's a good guide to the difference between savings and investments on Money Helper. I work for Money and Pension Service, I'm going to keep mentioning Money Helper. But it's free, it's impartial advice and guidance, so do have a look. So how to get started? This is where you have a look at your budget and see how much money you've got left over once you've paid all your weekly, monthly essential bills. Some like to save what's left over. Personally, I prefer to pay myself first. So what I like to do is to pay into my savings accounts on payday. So I'm not tempted to spend money on other things. And you can have as many savings accounts as you like. You can have one, I don't know, for holidays, for DIY, Christmas, new school term. The important thing about saving is to start. Talking about saving is also a good thing within the family. Get everybody involved and make it fun. Plan for the good things. Family and friends are sure to have tips on this topic. Involving your partner and children, if you have them, can be fun as you aim for common savings goals, particularly if it's for treats. As parents, we want our children to be carefree and not to be burdened with adult concerns too early. However, children start to learn about money from as young as 3. They're aware of the transactions of everyday life and start to develop money habits from 7 years old. Talking to children about money from a young age is a good thing, and it helps them in 3 ways. They get the practice they need. Children need to learn how to manage money, and it's a gradual process. They learn from their mistakes. If they splurge all their money on sweets and they can't afford to buy a new football, it's a lesson, but it's a painless one, relatively speaking. It will help them to avoid bigger money problems later in life, or you would hope so. Involving children in family money decisions can help reduce nagging, stop them pestering you, and will also help teach them to good money habits. If you're saving for a family holiday, that could mean that you've decided to reduce on going out, days out, trips out. Explaining this and enlisting your children's support can make the changes easier and perhaps encourage them to think about other ways you can save as a family. And actually, children love the idea of saving. They love putting money into a piggy bank and giving it a good old shake to hear it. And if they've got a savings account, they like the idea of free money in the shape of interest or dividends. If you can afford to give your children pocket money, it's again a great way for them to learn about money choices. It's good for them to physically handle money and to hand it over, see what comes back over the counter, whether it's sweets or a toy. Another important way you can nurture good money habits in your children is talking about wants and needs. It's a good way to stop them from pestering you from things. We've got some great ideas on Money Helper in our Talk, Learn, Do section about games you can play, money games you can play with your children. There's a really good one that involves coloured stickers, and this helps explain wants and needs. You go around the house with coloured stickers or post-it notes, putting them on things that are either wants, nice to have, or needs, essential items, and then you can talk about them afterwards. There are lots of resources online on this topic in addition to Money Helper. You'll find information on Mumsnet, Young Enterprise, My Money Sense, Barclays Bank, HSBC Bank, and really all of the retail banks all have information on how to talk to children about money. We're now going to talk about credit. You'll probably need to borrow money at some point in your life, particularly for the big things like a mortgage to buy your home or a student loan for higher education. But we often borrow small amounts to help spread costs for other purchases, and it's important that you're fully aware of the costs and implications of your credit choices. Money Help has a simple tool about options for borrowing anything from £500 to £50,000. It explains the pros and cons of different loan choices. You can check out specific products such as personal loans and credit cards on price comparison sites as well. And Money Saving Expert has details of all of the best deals. Credit cards can be useful for booking travel and holidays and can offer some consumer protection benefits in certain circumstances and can offer cost savings when paying for goods abroad. I'm always going to say this, check the small print and be aware of the charges and interest rates which apply. Do make sure that you can afford the repayments. Having a budget to work to will be helpful with this. A good example of cost awareness is student loans. Interest starts to accrue on these as soon as they're paid out while you're still studying. Repayments don't start until you're earning above a certain threshold and payments are made by your employer through payroll. It's a seamless process, but you may be shocked to find that you owe more than you think because of the accrued interest. Do check your student loan account and if possible make additional voluntary payments to help reduce the total interest you pay and shorten the length of the loan. This logic can be applied to other types of loan, although do check the small print again. One important thing to remember with any borrowing is to ensure that you make all the repayments on time or penalties may apply. Circumstances change throughout our lives and financial arrangements that were manageable can become more difficult. If you have multiple credit arrangements, consolidating them into one loan could be helpful, could help you keep track of repayments and reduce the risk of payments being missed. You could also save money this way. More information on this option on Money Helper. If you're struggling to make repayments, the first thing you should do is contact your lender and talk to them. They may be able to change your payment day or terms to make things easier for you. If you're struggling to make repayments or you're falling behind with payments of essential bills, you could benefit from regulated debt advice. Money Helper has a debt advice locator tool, which helps find local free debt advice services to help you. This could be face-to-face support, or it could be via the telephone, or it could be a digital pathway with web chat. It's all about making what could be a difficult conversation as easy as possible and getting you the help you need. The important thing to remember about debt advice is that it is a free service. Well, thank you for watching. My name's Victoria. I'm from the Money and Pension Service. I hope you're inspired to talk about money and to do one thing. Any telephone numbers or websites that I've mentioned and resources will all be in the description afterwards.